So target costing was first pioneered by Toyota. So at that time, that is during World War II, they had very limited resources and they had lot of competition from global markets and they were desperate to make high quality products at low prices because in Japan, since already they are having limited resources, people were not having that money, right? So they wanted good products, good quality products at low price. So at that time, Toyota, they thought about coming up with a product where I don't want to find out the cost. I don't want to control the cost after incurring. Before the commencement of production only, that is at the design stage only, right? I need to control my cost. So this is a revolutionary thinking. If you see in costing any type of innovative techniques which is being applied, most of them might have come from Japan only. So Toyota, what they have done is to one of their model called as Toyota Corolla. Toyota Corolla, this is the car at that time, they applied target costing. So what they have done is for this car, first they have identified what is the customer requirement, what they are expecting from the car. So what generally they expect from car, they expect fuel efficiency, low price, good furniture, good engine. This is what they expect or not? Yes. So they've conducted a research based on that. This is what they got. Then they also took the price also into consideration. That means again based on market demand, what customer is ready to pay. Based on that, they come up with a price. So assume that it is 8 lakhs. This is the price. Now they applied a reverse concept of our general selling price is equal to cost plus profit. Now what they have done is from market price minus this profit, their profit if you remove, whatever we are getting, that only they took it as the target cost. That means what? Their production should happen within this cost only. So assume their margin is here, they kept 1,20,000. So that means what is the target cost for them? 6,80,000 is the target cost. Now what they have done is all the parts, whatever required, they have estimated. All the parts, engine, the components, everything they added up. So then it is coming to 7,20,000. So what they have to do now? They have to cut down their cost to 6,80,000. Now, what is the target they have given to their engineers is you should come up with the ideas where we can what? Reduce the cost. That is reducing the components or taking an alternative material. For example, generally in cars they use high steel strength, high steel. So here what you can do, you can use high strength plastic also to make the cars, right? So this kind of engineering tips they have taken from their engineers and they're able to reduce the cost to 6,80,000. And not only that, even they need to have a good rapport with their suppliers also because their quality of the car depends on what components they are getting. So even through suppliers also they gave the ideas. I mean how to reduce the cost, how they have to change their design to reduce their cost. Then they are able to produce the car at target cost. So in 1960s, first Toyota has done it. Then other companies like Panasonic, Sony, Canon, all these companies followed. And then slowly in 1980s also US, Europe, all Western countries also started adopting this technique. Why it is so popular is, the reason is till that time people were calculating cost after production. So if you have to control the cost, how you can control cost? Only after production, then you should think of how I can reduce my cost. But this is a revolutionary thing, no? Where at the design stage itself, what you are trying to do? You are trying to estimate the cost, how much you are going to incur, and that you will compare with what? The target cost, what you have to incur. So to apply this target costing technique, only to which kind of products I can apply is where at the design stage only you are able to estimate 89 to 90% or 95% of the cost. Only for those type of products I can apply target costing. So generally cars, electronic items, where when you are designing the product only you know what is the cost that is going to go into the making of the product. Alanti vaadiki maatrame we can apply target costing. Understood? Now here what they have done when they compared their target cost with the actual cost, while calculating this actual cost, you can apply ABC while calculating the actual cost. So what they have done here, they have done value analysis and value engineering. What is value analysis is how you can reduce the cost of your total manufacturing on concentrating what? The design aspect, the components, you're working on engineering things or not? Yes. That is called as value engineering, so that you can come up with ideas of reducing the cost. దీన్నే మనం ఏమంటాం? Value engineering. So this is what they have done. So this is the story of target costing. So now you might have understood what are the steps here. What are the steps? First you have to identify which one. First of all, this target costing is applicable for only which kind of products? Target costing can be applied only for which kind of products? The products which has design, and then at design stage only you are able to estimate 80 to 90% of the cost. Only to those kind of products we can apply target costing, right? So let us write, if you see the steps involved in this, if you try to remember the steps what I told you, first you need to, did you remember? Identify customer requirements. See, if Corolla has come up in this world, means that model, whatever they have introduced, on what basis they came up with that model, a superior model. At that time, it was a very popular car. So how they are able to come up with that? They have identified what is a customer requirement. అప్పటికి వాళ్ళు ఏం చూస్తున్నారంటే ఒక హై ఎండ్ కార్, good fuel efficiency, good furniture, good engine. This is what they wanted. So they listened to the customers. Out of customer expectations only, they came up with this what? Product. Right? So this is the first step in our target costing. That is identifying the customer requirements. Okay, then identify customer requirements. I will give you steps. Second one, what they have done? Then they have done market survey. For what purpose? To find out what is the price, selling price, target price, how much they should keep. Okay, then I will give you my steps. I'll give you notes. Just concentrate on what I'm trying to write here. And then selling price. After that, you know what is your target profit based on your investment. You know what to be earned. Cost of capital. What is your cost of capital? Based on that, you will decide how much return to be earned. Then you will get your target cost. How do you get target cost? From market price, remove the target profit, you will get what? Target cost. Then you need to compute what is your actual cost. Compute actual cost for making of your product. Then you will identify gap. What is the gap? The difference between actual cost and target cost. That gap you need to fill up, reduce to target cost by using a value engineering. That is concentrating on the design of the product, how you can change the design, how you can reduce the number of components, how you can use substitute material so that I can bring down my cost without hampering the quality of the product. Then you will achieve the target cost. Then you will start manufacturing the product. Then you will sell in the market. And then after that, they don't stop. They continuously work on what? Reducing the cost. So these are the steps in target costing. Understood? Yes. So it's a very innovative thing, no, what they have done. Not now, 1960s they have done it. Now, why exactly I'm covering target costing after ABCs? For target costing, the actual cost computation is based on activity based costing only. So that is the reason I've decided to cover this. So now you can write whatever discussion we have. What I will do here is, with this example only, I will give you notes. Okay, if you see the material, our material, all these steps are there. See the definition of target costing. A structured approach in determining the cost at which a proposed product with specified functionality and quality must be produced to generate a desired level of profitability at its anticipated selling price. This is only target costing. So what it is a structured approach in determining what? The cost at which a desired or a proposed product with a specified functionality and quality must be produced to generate a desired level of profitability at anticipated selling price. So in this definition, everything is covered. So it is an approach where we are trying to calculate the cost to produce a product which has a specified functionality and also what? Quality. And you have a desired profit also, no? So to ensure that all these things are happening, okay, at what cost you need to produce that product? That is only what? Target cost. So ఇందులోనే ఆ మొత్తం కవర్ అయిపోయినాయి చూడండి, డెఫినేషన్ everything. What is step number 1 in target costing is identifying the market requirements as regards design, utility, and need for a new product or improvements of existing products. See, every time it may not be a new product, completely innovative product is not possible. Sometimes even a marginal change in the features of a product is also a what? New product. Then set target selling price based on customer expectations and sales forecast. So based on your research or your team, marketing team, extensive research, get the price customers are willing to pay and what is their expectations. Based on that, set the price. From that, remove, and not only that, even how much volume also we can produce. Generally, you will create a table like this. What is that? Demand and price. According to the price, what is going to be the demand? So what you will do, wherever you are getting maximum demand quantity, that price only will select or not? Yes. Then from that price, you will remove what is the target profit, depending on how much investment you are making, your long-term profit objectives. Then you will get target cost, target selling price less target profit margin. Next step is you should calculate the actual cost, that is current cost of producing the new product. Now identify the gap between which one. If your actual cost is exactly equal to target cost, that is fine, isn't it? But most of the time your actual cost may not be equal to target cost. Then you should try to reduce that by adopting which one? Value engineering and value analysis. What is the difference? Yesterday, while covering the concept of ABC, activity based management, I told you that it is cost management applying ABC, where we use value analysis only. Activity analysis, cost driver analysis, and performance analysis, no. So in activity analysis, what we applied is value analysis only, where We identified value added and non-value added activities, and we tried to eliminate which one? Non-value added. So generally what is the difference between value engineering and value analysis is value engineering starts before commencement of production, whereas value analysis starts after production. It starts after what? Production. That means our target is to reduce the existing cost what we are incurring under which one? Value analysis. For value engineering, as a production start gaakamunde, we are trying to what? Control the cost. Idantha cost controlling thing only. Why? Before the production commencing, you are calculating your cost and you are trying to match that cost with target cost, means there only you are trying to control your cost or not. So that is value engineering. రెండిటికి difference ఉందా? There is a difference between both. Value engineering starts before, whereas this one after production. This is a preventive thing. This is a corrective thing. It is proactive or not? Yeah, this is reactive. So there is a difference between these two. And then once you achieve this target cost, you have to continue that process. So you need to always think of how again I can improve this cost further. So these are the steps. Okay, now these steps fully explained here also one by one with the help of the example whatever I put, Toyota Corolla, I told you, with the help of that only we will write these steps now. That's it. That is only the concept. So suitability of target costing. Elanti products ka apply cheyali to which type of products? Yes. You should apply to those products which require design and its cost can be estimated during almost 80 to 90% we can estimate during design stage only. Only to such type of products we can apply target costing. So ఇప్పుడు టయోటా అంటే అది చేస్తుంది కార్సే కదా, ఆటోమొబైల్ ఆర్ నాట్? ఎస్. అలాంటి వాటికి అప్లై చేయొచ్చా మరి? ఎస్, వీ కెన్ అప్లై. Right. Target costing was first. Target costing was first introduced by Toyota in the year 1960. After World War II, Japan was short of resources, facing a global competition, requirement for high quality products at a lower price. This led to introduction of a new model of car, Toyota Corolla, by Toyota, to which they applied to which they have applied target costing. Right? So now what we will do is the step-by-step approach, how they applied this target costing to Toyota Corolla, we will write now. Step-by-step procedure. Heading laga rayandi next. Step-by-step target costing process. Followed. Step-by-step target costing followed by Toyota. First, step number 1 is identifying customer requirements. Step number 1 is identifying customer requirements. Customer requirements. So what are the customer requirements with respect to this car was? So for that they have studied the market. Toyota first studied market and customer expectations. Customer expectations. Customer expectations in Corolla included. So what are the expectations they had is affordable price, then good fuel efficiency, reliable engine, comfortable interior, low maintenance cost. So these are the requirements of what they got from customer after an extensive study of the market and also the expectations of the customers. So this is the first thing we need to do whenever you want to come up with any product naturally. Next, step number 2. So from taking these things into consideration only, they came up with that model. Step number 2 is now determining the selling price. Determining selling price. Toyota estimated the price customers willing to pay. The price customers willing to pay this price was determined based on competitor prices, next thing customer affordability, then market demand. So here, assume at that time expected market price of Corolla is 8 lakhs. Then step number 3 is decide what is the desired profit margin. Step number 3. Decide desired profit margin. So how much profit to be how much profit to be taken depends on what? Our investment. How much ROI we are expecting from our investment. So next one is Toyota fixed the required profit based on ROI on investment. For this, they should consider what is the long-term strategy of the company. So assume now desired profit is desired profit 1,20,000 rupees per car. Okay. So దీన్ని వీళ్ళు ఎలా సెట్ చేశారంటే this was based on corporate profit targets. So what is the target set by their management from this particular investment? Okay, they will give a budget for this particular production. Next one, how much shareholders are expecting. Shareholders expectations also be taken into consideration, and also long-term strategy. Right, next step number 4. Calculate target cost. Calculate target cost. So how do you get target cost is target selling price minus, how do you get the target profit? So in our example, what is our target cost is 8 lakhs is the target selling price, and target profit is 1 lakh 20. So 6 lakh 80,000 is the target cost. So that means what? Our car must be produced within what? 6 lakh 80,000. Step number 5. Break target cost into component cost. Now you need to break down, no, 6 lakh 80 is to be incurred for which items, what elements, then that they have done it. So Toyota then distributed the cost among components. So then they've estimated what parts are required and how much cost is required for that. For each component, they've set target cost. Component, engine, 2 lakh rupees. Then body, car body, that is 1 lakh 80 to make that. Then interior 1 lakh rupees. Electronics 70,000 rupees. Assembly 1 lakh 30. So what is the total you are getting here? 6 lakh 80,000. Now each department have received strict targets now. So this is what the budget is for each one. To the respective department they have sent these targets. Each department received strict cost targets. Step number 6, value engineering. Value engineering. It if estimated cost exceed target cost. If estimated cost exceed target cost, Toyota applied value engineering. Value engineering. Value engineering means what I told you. It is a process of redesigning, changes in your design or your components to ensure that your cost is reduced. That is called as value engineering. At which stage? Before the production only. Yes. So example వాళ్ళు తీసుకున్న ఇంప్రూవ్మెంట్స్ ఏంటంటే, example of improvements. What are the improvements they targeted is simplifying the parts, using cheaper material without affecting quality. Then reducing the number of components, right? Improving manufacturing efficiency, improving manufacturing efficiency. Okay. So whose efforts are required to make all this? Engineers. For production team engineers, their efforts are required. So this stage involved engineers, designers, procurement teams, then suppliers. So if you want to achieve all these improvements, you require help of all these people. Even suppliers also will play a role now to get cheaper materials. Then immediately what they have done is their costs were exceeding. So they held a meeting with the suppliers. They clearly told that this is type of components we want. So what you do is reduce your the size or the designs. Okay, this is how you can reduce it. Adi kuda, that knowledge also they only gave to their suppliers. Then suppliers, according to their requirement, they started producing. So next thing what they have done is they had a discussion with suppliers. Step number 7, suppliers cost reduction. Supplier cost reduction. Toyota worked closely with their suppliers, closely with their suppliers. They asked suppliers to redesign components, redesign components, reduce material waste, reduce material waste, improve production process, improve production process. So this collaboration with their suppliers has become a key feature of the Toyota production system. This collaboration is a key feature of the Toyota production system. Step number 8 is continuous cost monitoring. Continuous cost monitoring. Even after production started, even after production started, Toyota continuously monitored cost through. Here also they applied a technique called as Kaizen costing. Kaizen. Kaizen means continuous improvement. We have a topic on this also. Kaizen means continuous improvement. So ensured this ensured cost remained within the target. Cost remained within target and further cost reductions were achieved. Further cost reductions were achieved. ఇవి So tell me, what is the flow there? First, market research, identifying customer requirements, setting based on the selling price. Then what is your target profit? Arrive at target cost. Then calculate what is your cost. What is going to be your cost? Compare with it. If there is any gap, you should apply what? Value engineering and value analysis. Value engineering generally we apply for before production. So value engineering apply here. Then reduce the cost. Once you are able to achieve the target, then you will launch the product. And you will not keep quiet. Then you should make continuous improvement, which we call it as Kaizen. Kaizen means what? Continuous improvement. So that also will study separately as a topic, Kaizen costing. ఇవి స్టెప్స్ అర్థమైందా? సో ఇందులో నేను అన్ని పాయింట్స్ అన్ని కూడా రాశానండి. ఏ పాయింట్స్ కన్సిడర్ చేశారు వాళ్ళు అనే దాన్ని, ఎందుకంటే ఈ విల్ ఆల్సో హ్యావ్ అన్ ఐడియా ఆఫ్ ద కాన్సెప్ట్. ఎస్. సో స్టెప్స్ గుర్తుంటాయి కదా మీకు? Now while calculating cost here, while estimating the cost, which technique we will use, absorption costing or ABC? We will use ABC. So you can make a note of that. For calculating cost, use which cost? This is estimated cost. Estimated cost. Use ABC. ఎందుకు ABC వాడతాం? Because we know that ABC is a superior technique than what? Absorption. Right? Yes. So let us start the problems now. Applicability of target costing చెప్పండి ఎవరికి? Applicability of target costing. Yes. It is applicable to those products where at design stage, at design phase, we can estimate 80 to 90% of the production cost. 80 to 90% of the production cost. Okay. Yes. So let us do problems relating to this. So what is target costing and what is target costing? Definition I did not ask you to write. What is target costing? It is a structured approach to achieve a cost with a cost of a proposed product with a specified functionality and quality at a desired profit level with the anticipated selling price. This is target costing. So in the name only we can easily understand that our costing is done with an objective to achieve what? Target. That is what we should understand. Okay. Right. So you can read all these steps. These all are critical. But instead of explaining the theory, what I have decided is just taken that example. Based on that only, I explained all these things. Customer product design specifications. So ఇప్పుడు మనం ఏ కొత్త ప్రోడక్ట్ లాంచ్ చేయాలంటే always we should go by what? Customers. Simple. In the market now, if you have to survive, don't produce what you want. Produce what customer wants. Isn't it? That is the market mantra now. So see the questions now. Question number 1. B manufacturing company sells its product at 1000 rupees per unit. Due to competition, its competitors are likely to reduce price by 15%. B wants to respond aggressively by cutting price by 20% and expects that the present volume of 1,50,000 units per annum will increase to 2 lakhs. B wants to earn a 10% target profit on sales. Okay. So now tell me, what is the target cost for B? For B, what is the target cost? Can you tell me? For B, what should be the target cost? 720. What do you got now? టార్గెట్ కాస్ట్ ఎంత వచ్చింది? టార్గెట్ కాస్ట్ ఎలా వస్తుందని తెలుసు కదా ఫార్ములా. ఎలా వస్తుంది టార్గెట్ కాస్ట్? టార్గెట్ సెల్లింగ్ ప్రైస్. ఆ ప్రైస్ అనేది దేని మీద తీసుకుంటాం మనం? మార్కెట్ ప్రైస్. కాంపిటీటర్స్ ప్రైస్ ఆర్ నాట్? ఆ ప్రైస్ని ఎలా ఏ బేస్ మీద తీసుకుంటాం? వాట్ అవర్ కాంపిటీటర్స్ ఆర్ చార్జింగ్. And also demand pattern also, price demand relationship, using that also we will fix the price. So here currently B is selling at what price? 1000 rupees. Okay, so there is an intense competition. Due to this, what their competitors are doing, they are likely to reduce the price by 15%. But what B wants to do, he wants to respond aggressively. He reduced how much? 20%. And by doing that, he expects the units to increase to how many units per volume? To 2 lakh units. And what is the target profit he wants? 10% profit target. So 1000 rupees minus reduction how much? 20% means 800. Now on that, what is the target? 10% means 80. So 720 is the target cost. Yes. But what is their existing cost? Direct metal 400 rupees, direct labor 55, direct machinery 70, direct manufacturing cost 525. Currently వీళ్ళకి ఎంత పడుతుంది చూడండి? 1050. 1050. Now how much they should incur? యాడ్ చేయండి. This is target. According to here, this is a target. Number of orders 22,500 existing. Target 21,250 orders. Testing hours. How much is this? 45 lakhs currently. That they would like to reduce it to 30 lakhs. Units reworked. When you will do reworking of the units, whenever there is a defectiveness, you will start reworking. So reworked units, 12,000, that you would, here target would be what? 13,000. There could be an increase because units are going up. So units reworked also will increase. So here they have already given you rate also, activity rate also they have given 80 rupees per order, 2 rupees per hour and 100 rupees per unit. This is the activity rate. Manufacturing overheads are allocated using relevant cost drivers. Other operating costs per unit for the expected volume are estimated as follows. Apart from manufacturing overheads, there are some other costs also. What are those? Research and design per unit they have given. Other one is marketing and customer service, which is 130. So that is 180. Calculate the target cost per unit. and the target cost for the proposed volume showing breakup of different elements. So, and also get the target product profitability statement. So, you need to show per unit also here. Calculate the target cost per unit and total target cost for the proposed volumes. What is the proposed volume? 2 lakhs. Antena? Yes. Now, if it is earlier discussing about that only, currently what is the price? 1000 rupees. And if they want to reduce the price by 20%, what will be revised? 1000 rupees minus 20% on this 200 means 800. And what is the target profit on sales? 10%. సో అప్పుడు ఎంత అవుతుంది మనకి 720 రూపీస్ అవుతుంది మనకి టార్గెట్ కాస్ట్. కానీ ఇక్కడ టార్గెట్ కాస్ట్ చూస్తే ఓన్లీ అప్ టు డైరెక్ట్ కాస్ట్ ఓన్లీ యూఆర్ గెటింగ్ 990 రూపీస్ నో కదా. ఎస్. అండ్ ఈవెన్ మ్యానుఫ్యాక్చరింగ్ ఓవర్ హెడ్స్ ఇఫ్ యూ కన్సిడర్ దట్ విల్ గో. తర్వాత రీసెర్చ్ అండ్ డిజైన్, మార్కెటింగ్, కస్టమర్ ఇవన్నీ యాడ్ చేస్తే ఇంకేమవుతుంది? ఎక్కువైపోతుందా లేదా? ఎస్. సో దెన్ కాన్సెప్ట్ డజంట్ మ్యాచ్ నో. ఇప్పుడు ఎగ్జిస్టింగ్ కాస్ట్ తీసుకుంటే 1050 ఉంది, దాన్ని మనం దేనికి రెడ్యూస్ చేయాలి? టార్గెట్ కాస్ట్కి రెడ్యూస్ చేయాలి, అవునా? ఎస్. సో టార్గెట్ కాస్ట్ అంటే ఇప్పుడు మరి 720 షుడ్ ఐ కాల్ ఇట్ as టార్గెట్ కాస్ట్ ఆర్ whatever they have given here, that we should call it as target cost. Whatever breakup they have given, that only we should consider or not? అవునా? ఎస్. సో డేటాలో ఏమైనా రాంగ్ ఉందంటారా? If you go by the first paragraph, we are getting target cost by 720 rupees. But if you consider all the target costs here, it is already 990 only, direct cost. If you take 1000 rupees minus what is the target profit 10%, that is also coming up to what? 900. Isn't it? Yes. So let us just check the question here first, then we will confirm. This is CMA material question. Let me check the question here. So you know how to calculate the cost here? What we should do? We should add up all these costs. Even overheads also we should add. Then divide it by what? 2 lakh units, then we'll get total cost. And then, yes. That should match with what? Your target cost. What is the target cost? 720 is the target cost. Check this on the question material. ఎక్కడి వరకు? Check. Okay. See here, it is the total of only these three. That is not a separate cost. Which one? We took this also into consideration of 495, 525. That is just a subtotal here. That line was missing. This is the total direct manufacturing cost. Just add these three figures, you can match with that. 385, 50 plus 60 is 495. So now 495 plus even overheads also we should consider. First ordering cost, how much? How many orders now? 21, 250 into 80 rupees you multiply. Hmm. Okay. You are asking a doubt. So that is rupees or orders. Just see the question here. Left side. ఏమని ఇచ్చిండు? Manufacturing overheads. Number of orders. So ఇవి orders ఇవి. టెస్టింగ్ అవర్స్ ఇవి కూడా టెస్టింగ్ అవర్స్ లోపల వాటికి అది రూపీస్ అది ఇది యాక్టివిటీ రేట్ దే హావ్ గివెన్ these are number of orders only by question only we can easily understand those are not rupees those are the activity volumes cost driver volumes so 21 250 into 80 rupees you multiply 21 250 into 80 divided by how many units target 2 lakhs ఎంత వస్తుంది 8.5 టెస్టింగ్ 30 lakhs into 2 60 lakhs divided by 2 lakhs అంటే 30 వస్తుంది రీవర్కింగ్ కాస్ట్ తీసుకుంటే 13,000 into 100 divided by 2 lakhs అంటే 13 lakhs divided by 2 lakhs 6.5 యాడ్ చేయండి ఇవి 495 85 30 plus 6.5 540 0.5 కూడా వస్తుంది కదా ఇది 8.5 plus apart from this you will also incur research and design marketing and customer service so 180 exactly 720 you will get matching or not yes so this is your target cost మరి ఎగ్జిస్టింగ్ కాస్ట్ అంటే ఇదే ఇదంతా ఎగ్జిస్టింగ్ కాస్ట్ సో దాన్ని మనం ఏం చేయాలి దీనికి రెడ్యూస్ చేయాలి చూడండి ఇక్కడ గమనించండి direct material you are able to reduce to 385 or not that means what they have done they might have reduced the number of components or they might have gone for a cheaper raw material without affecting the quality so that is how now each one they are able to reduce సో ఇప్పుడు వాళ్ళు ఏం చేసి ఉంటారు మన టార్గెట్ కాస్ట్కి ఒక్కొక్కటి ఎంత రెడ్యూస్ చేయగలం మాక్సిమం దట్ దే మైట్ హ్యావ్ కన్సిడర్ నాట్ ఎస్ ఈవెన్ దే వర్క్డ్ ఆన్ దీస్ యాక్టివిటీస్ ఆల్సో value analysis they can do and try to eliminate non-value added activities then they can also achieve the reduction in cost driver volume ante so target product profitability statement also we should show you so right now question number 1 first one is calculation of target price target price what is the target price here 1000 rupees is the 1000 minus 20%. 800 is the target price. Now target profit, target cost is target price minus target profit. 800 minus 20%, 720. Sorry, 10%, 720. This is your target cost per unit. తర్వాత ఏమడిగిండు ఇక్కడ target cost for the proposed volume with breakup of different elements. Cost sheet of target cost. For the proposed volume. particulars, amount in rupees. First one, direct material. How much is direct material? 385. Direct labor, 50. Direct machining cost, 60. So total direct manufacturing cost is 495. Now manufacturing overheads. Manufacturing overheads. Ordering cost, first one. How many orders are required for this is 21,250 into the rate per order is 80 rupees divided by the estimated volume is at this price 2 lakhs. How much you are getting for this? 8.5. Next one, testing cost, 30 lakhs testing hours, per hour rate is 2 rupees divided by 2 lakhs. This is how we get the cost per unit. Testing cost per unit is per unit 30 rupees. Next activity is rework cost. How many units are expected to be reworked is 13,000 into rework cost is 100 rupees divided by per unit. If you want, you have to divide it by 2 lakhs. 6.5 rupees per unit. So what is the total manufacturing cost? 540. This is your total manufacturing cost. Apart from this, they also give some other operating costs. Other operating cost. Research and development, they have given per unit 50. Marketing and customer service, 130 rupees. So this is the target cost. Okay. Now part 2, they asked target product profitability statement. So product profitability statement and a sales minus cost. The presentation we will do. Part 2, target product profitability statement. Profitability. Target product profitability statement. Particulars, amount in rupees. First take sales. How many units now they are going to sell? 2 lakh units. What is the target price? 800. This is the price. Take rupees in lakhs. 2 lakhs into 800 is 1600 lakhs. How many lakhs? 1600 lakhs. Less. Now cost we should show cost of sales. Cost of sales. Detailed breakup చూపించమన్నాడు వాడు క్వశ్చన్లో. అంటే మనం అంతా ఇంతమంది చేసినంత చూపించేసేయాలి. డైరెక్ట్ మెటీరియల్ 2 lakh units into 385. Direct labor 2 lakh units into 50. Direct manufacturing cost, machining cost. Direct machining cost is 2 lakhs into 60 rupees. Multiply and get them. 385 into 2 is 770 lakhs. 50 into 2 is 100. This is 120. Right? Now to this add manufacturing overheads. Manufacturing overheads. How do you get cost of sales? To the cost of production add even other overheads. ఇప్పుడు దాకా వచ్చింది prime cost. To that add manufacturing overheads. First one ordering. 21,250 into 80 rupees. చెప్పండి ఎంతో? Testing 30 lakhs hours into 2 rupees. Rework 13,000 units into 100. So this is 13 lakhs, 60 lakhs this is. What about this? 17 lakhs. ఇది మ్యానుఫ్యాక్చరింగ్ ఓవర్హెడ్స్. ఇవి కాకుండా యూ హ్యావ్ R&D ఆల్సో. R&D ఆపరేటింగ్ ఎక్స్పెన్సెస్. R&D 50 per unit into 2 lakhs units, 100 lakhs. Marketing and 130 into 2 lakhs, 260. So get the profit now. Profit we don't know, target profit 80 rupees now. So 2 lakhs into 80, that only will get 160 lakhs. Okay. Next question. So there only you are doing target profitability statement. See this question now. desktop company manufactures and sells 7,500 units of a product. The full cost per unit is 100 rupees. Full cost means what? Variable and fixed. The company has fixed its price so as to earn a 20% return on investment of 9 lakhs. What is their investment? 9 lakhs is the investment. On that, they want a return of how much? 20% means how much? 1 lakh 80,000. So, return what they want is 1 lakh 80. Unit 7,500. Full cost per unit is 100. Required. Calculate the selling price per unit from the above. So, what is the selling price? See here. What is the full cost? 100. And what is the profit per unit we want now? Target profit, how much they would like to earn total? 1 lakh 80. That is, he can earn for by selling how many units? 7,500 units. So, 1 lakh 80 divided by 7,500 units. 24. So, 124 should be the selling price per unit. Then, also calculate the markup percentage on the full cost per unit. Profit percentage. 24 rupees divided by what is the full cost? 100. Into 100, if you do 24% is the markup on full cost per unit. Next. If the selling price as calculated above represents a markup of 40% on variable cost per unit. Calculate the variable cost per unit. So understand it carefully. If the selling price as calculated above, what is the selling price? We calculated first one. 124 represents a markup of 40% on variable cost per unit. Then you should calculate the variable cost. That means what? He's saying selling price is equal to variable cost plus what? Markup. That is what he's saying. So what is the selling price? 124. We don't know what is the variable cost. And markup is how much? The next అనుకోండి వేరియబుల్ కాస్ట్ని పర్ యూనిట్ దాని మీద 40% కదా మార్కప్ అంటే ఎంత 0.4x. సో దేర్ ఫోర్ 1.4x is equal to 124. X is equal to 124 divided by 1.4. 88.57 is the variable cost per unit. Understood? So here the selling price, how they are getting is by adding a markup of on what? Variable cost only. So they are only charging, they are only including which cost? Variable cost in this selling price. They have not included which one? Fixed cost. How they covered that fixed cost? Through the margin only they covered that fixed cost. Next. Calculate the company's income if it had changed the selling price to 150, and at this price the company could have sold 6,750 units. Advise whether this price reduction is advisable. So should they reduce the price? See, earlier what was the price? 124 ఇంతకు ముందు. Okay. What was the profit? ₹24 earlier. Into how many units? 7,500. 1 lakh 80. ఇదే కదా ఇంతకుముందు వాళ్ళ ప్రాఫిట్. ఇప్పుడు వాళ్ళు ఏమంటారంటే దే వుడ్ లైక్ టు రెడ్యూస్ ద సెల్లింగ్ ప్రైస్ టు 115. ఓకే, బట్ హౌ మెనీ యూనిట్స్ దే కెన్ సెల్? 6,750. So obviously the profit is going to decrease or not. ఎందుకని ప్రైస్ తగ్గింది, యూనిట్స్ కూడా తగ్గింది కదా, naturally your profitability will come down. So this is not advisable. The price reduction is not advisable because it will decrease the overall profitability. Fourth one is, in response to competitive pressures, the company must reduce the price to 105 next year in order to achieve sales of 7,500 units. So to sell the same number of units, they have to reduce their price to what? 105. The company also plans to reduce its investment to 8,25,000. If a 20% return on investment should be maintained, what is the target cost per unit for next year? So now, selling price, how much target? 105. Target profit now revised. Investment is 8,25,000 on that 20%. Divided by 7,500. So 105 minus 22. So this is the target cost. Done? Yes. So let us present question number 2. First question, what we have to calculate? Target price. What is the first question? Calculate the selling price per unit and also markup percentage on full cost. Question ఏమేమి ఇచ్చాడు first given? Okay, sales units currently 7,500. Then full cost per unit 100 rupees. And now company is fixing a margin of 20% on return on investment. Investment 9 lakhs. This is what given in the question. They are fixing the price to on a margin of 20%. So first question is calculate the selling price. Part 1. Profit per unit, how to get this? First you get the total target profit you should get, 9 lakhs into 20%. Divided by 7,500 units. $124. This is part 1. Markup కూడా అడిగండి ఇక్కడ. Markup percentage on full cost. ₹24 divided by 100. 24%. Second one, variable cost per unit. We have to calculate what? Variable cost per unit. If markup is 40% on variable cost per unit, then in that case, what is the variable cost? If markup is 40% on variable cost. So therefore selling price is equal to variable cost per unit plus profit per unit. Selling price per unit same as above 124. If markup is 40% on variable cost, what is the variable cost to get the same price? So 1.4x is equal to 124. 88 point how much you got? 57. This is your second part. Third part. If they reduce the price to 150 and volume is reduced to 6,750, is it advisable or not? Okay. So volume and price చూస్తేనే మనకు అర్థమైపోతుంది. But anyhow, we have to present the answer. Part 3. See, full cost అంటే ఇక్కడ మనకి ఏ కాస్ట్ ఉంది? Variable cost and fixed cost. Generally, to take the decision, fixed cost is irrelevant here. ఎందుకని మనం 7,500 ప్రొడ్యూస్ చేసినా లేకపోతే 6,750 ప్రొడ్యూస్ చేసినా ఫిక్స్డ్ కాస్ట్ విల్ రిమైన్ వాట్ సేమ్. సో decision making that is not relevant here. So only based on contribution also you can take decision. Sales minus variable cost, whatever contribution we are getting, on contribution basis also we can take the decision. What is the variable cost? ఆ పర్సంటేజ్లు ఏం మనకి ఇవ్వలేదు కదా, ఓన్లీ సెకండ్ క్వశ్చన్కి మాత్రమే ఇఫ్ వేరియబుల్ కాస్ట్ పర్ యూనిట్ దాని మీద మార్జిన్ అయితే హౌ మచ్ వీ హ్యావ్ టేకెన్. ఒకవేళ బ్రేకప్ చేయాలనుకోండి అప్పుడు ఎంత మనకి వేరియబుల్ కాస్ట్ పర్ యూనిట్ ఎంత వచ్చింది మనకి 88.57. ఫుల్ కాస్ట్ ఎంత 100. 100 minus 88.57 remaining will become your fixed. ఎంత? Yes, so 11.43 into how many units? 6,750 units. Yes, that is our fixed cost. So what is the company's income? Company's income if selling price is 115 rupees. 115 rupees selling price అయితే what is the income? So selling price 150 less variable cost per unit, which is 88.57 less contribution per unit, ఎంత వస్తుంది? 26.4. Now how many units into units is, how many units you can sell at this price? 6,750. సో మల్టిప్లై చేస్తే మనకి ఏమొస్తుంది? టోటల్ కాంట్రిబ్యూషన్ వస్తుంది 6750 into 26.43. అంతేనా? ఎంత వస్తుంది? If you consider full 43 also, 36.43, 78,403. Less fixed cost. ఇది ఎలా చేయొచ్చు అంటే మనం ఇందాక చెప్పాను కదా, టోటల్ కాస్ట్ ఇస్ How much? 100 rupees. Out of that, variable cost per unit is 88.57. Fixed cost per unit is balancing figure 11 point. So 11.43 into 6,750 units. 85,000 కదా, 6,750 యూనిట్స్ మనం తీసుకుంటుంది. ఇప్పుడు తీసుకుంటుంది 6,750 కదా. The full cost whatever we got 100. ఇందులో వేరియబుల్ కాస్ట్ ఎంత 88.57. రిమైనింగ్ 11.43 పర్ యూనిట్ అనేది 7,500కి అయితే ఓకే 7,500 into 11.43 how much will get 85,725. ఇప్పుడు ఇది ఎంత వచ్చింది 6,750కి. ఎస్, because total fixed cost will remain same now. Total fixed cost will remain same, but per unit will change. Kada? Yes. So presently, this 11.43 is for ఈ per unit వచ్చింది ఏ కెపాసిటీ మీద for what? 7,500 units only. So what we should take here 11.43 into 7,500. What is the fixed cost? 85,725. Yes, this is your fixed cost. Okay, fixed cost tells you that total will remain same. Per unit will decrease if output increases. So ఎంత వస్తుంది ప్రాఫిట్ ఇక్కడ 92,678. ఓకే, ఇది దేనికి ఇది 115 ప్రైస్కి అయితే. ఇంతకుముందు ఎగ్జిస్టింగ్ ఎంత ఉంది వీళ్ళకి, ప్రెసెంట్ ఇన్కమ్ ఎంత, present income selling price is 124, variable cost is 88.57, contribution per unit is 35.43, units any 7,500. So get the total contribution 2,65,000. From this less fixed cost same ఉంటుంది కదా 88,000, 85,725. So this is the current profit. So compare చేస్తే మనకి ఏమవుతుంది, present income ఎంత 1,80,000, ప్రాఫిట్ డిక్రీజ్ అవుతుందా లేదా. So that is the reason I said without considering fixed cost also we can take decision only by comparing which one, contributions. Decision తీసుకోవచ్చు. Right, as the profit with proposed is reducing by how much? 1,80,000 minus 92,678. Thus, 320. The proposal should not be implemented. Now, last part of the question you can see, fourth part. Now, the next year they would like to reduce the price to how much? Due to competitive pressures, they have to reduce to how much? 105. And to achieve the same 7,500 units, the company also plans to reduce its investment to 8 lakh 25 and their return on investment 20%. What is the target cost for next year? So part 4, చెప్పండి ఇప్పుడు టార్గెట్ ప్రైస్ ఎంత revised target price is 105 less target profit per unit. Revised investment is 8 lakh 25,000 into 20% is the return divided by how many units? 7,500. $22. So what is the target cost? 83. Okay. So remaining, how many are the questions? We have 2 more to go. Third question was asked in recent exam. Reverse working question this is. It was covered very recently. So we'll cover in next class these 2 questions. Yes. Okay.